Hi there, I'm Tyler Ballhorn. Welcome to the Stockscores Market Analysis for April 26, 2010. All right, the first chart that we're going to look at is the Dow 30, which is in a strong long-term upward trend. The recent market action over the last couple of months has taken that trend away from its upward trend line. We've got a shorter-term upward trend that is much steeper, and we are really nearing the top of that upward sloping channel. We're not there yet, but we're getting close. So there is some concern that we may see a pullback soon, but we're certainly not seeing any sign of that yet, and I would remain bullish on the large cap US stocks. The Canadian dollar is in an upward trend as well. Looks pretty strong, broke through some resistance there. We now have this upward trend line building, and I think that the Canadian dollar will continue to outperform the US dollar and be a leader among the global currencies. Now, gold is a little bit more of a difficult chart to call. We have some resistance right here, and it would be easy to notice that there's a head and shoulders bottoming pattern that has been building over the last few months, and we are now approaching resistance at the neckline. Now, we might get a break through that neckline. In fact, that's looking to be more and more likely, but the next level of resistance is not all that far away. So although gold looks like it wants to go higher, I don't know that the upside potential really makes it worth trading. My concern is that it rallies up to the highs of December and then gets stuck there. It's not really enough upside potential to justify the downside risk of the trade. Here's a chart of oil. We can see that the bottoms are rising over the last little while. That's a sign of optimism. But we can't really break out of this trading range that oil has been in for a number of months. So the market is building optimism. Weakness in the US dollar is helping. But until we get a break through that resistance, I wouldn't be too bullish on this market. Although, if we do get that breakout, this market should be a leader. We just got to wait for that breakout to actually happen. The NASDAQ 100 is also looking very strong. We're in a nice, strong, long-term upward trend. The rally that we've seen over the last 2 or 3 months is now pushing this market up near the top of that channel. And so my concern is we may see the rally in tech stocks fizzle out here. I wouldn't be surprised if we get some resistance type selling that causes us to see some profit taking in the market. So longer term it looks like it's going to continue higher. But in the short term, don't be surprised if we get a little bit of selling pressure as people take profits on some of the trades that they're up on. The S&P 500 is a very similar chart to the NASDAQ. It too is in a nice upward trend, but like the NASDAQ, it is pushing the upper boundary of that channel, not as close as the Dow, or pardon me, not as close as the NASDAQ, and like the Dow, it's still got a little bit of room to grow, but I am concerned that we're going to see this rally fizzle soon as we run into some selling pressure, mostly because of profit taking. Now, the TSX is one of the better looking markets right now. Unlike the US markets, it really hasn't been in a strong long-term upward trend. It has been consolidating over the last couple months, and today it's actually breaking through some resistance there, which gives it a pretty good potential to make a move in the near term. Now, this strength in the Canadian market is largely due to weakness in the US dollar. We'll look at the US dollar chart in just a moment. But if that weakness in the US dollar continues, that will help commodities, which helps a country like Canada, which has a heavy commodity-based economy. Now finally, we have a chart of the US dollar index. Unlike the Canadian ETF, the Canadian dollar ETF that we looked at earlier, this ETF is based on a basket of currencies relative to the US dollar. This chart's not bad, but we did have a falling top form here. We are now at that line of resistance. I think we could see this market go into a trading range, and some currencies, like the Canadian dollar, are doing better against the US dollar, and that will help the commodity market and some of the markets that are heavily commodity based, like the Australian and the Canadian. So to summarize, generally speaking, the buyers are in control of all of the markets that I like to look at each week. However, I do see signs that these markets should top out soon. They haven't made a breakdown yet, so I think you want to stay along, but certainly be aware that we are nearing the top of some of these upward sloping channels, particularly with the US markets, and you may see money rotate out of sectors like technology and into some of the lagging sectors like the commodity-based sectors, which in recent months have not done great. Well, that has been the Stockscores Market Analysis for April 26, 2010. For more information on the tools and services offered by Stockscores, I encourage you to visit us at www.stockscores.com. Have a great week in the market and trade well.